Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. I want to talk about right now something that I've been mentioning quite a bit during the last 6 months of trading, and it's the fact that it's been a glorious, glorious time to be a trader. Again, with the pandemic in context, the rally off of the lows in March with the stimulus package has created this environment that um, feels like the market can't go down. And a lot of pretty smart people and a lot of smart traders um, are right now mistakenly believing that 100% moves in stocks in 2 days is kind of the normal. And if a stock doesn't do 20, 40, 50%, 100% in one day or two, which we actually saw one stock do that in one day last week, that there's something wrong with the market. What am I doing wrong? What's going on with the market? I have news for you. You're spoiled. You are spoiled in a way that you have absolutely no idea. In the last 6 to 8 months, let's call it 9 months, I've been very, very clear with everybody in the boot camp, everybody who's come through the boot camp, that it's super important to make what is available because the market does go down. For the most part, most people trade long. They only look to be on the long side. They only look to be a buyer and don't understand short selling, don't even want to be a short seller, which is fine. By the way, I'm going to be, we did a coaching call recently where I explained short selling from A to Z, exactly how to do it, how to get in, what to look for. I'm going to post that video on Saturday, on tomorrow. So take a look for that if short selling is new to you. But here's the point that I want to get across. The market can and will go down. We will have days that the market and or the stocks pull back 2 days, 3 days, sometimes even more than that, sometimes even a little bit deeper pullback. It's a normal function of the market. The market that we're in right now, especially the those trading on trading apps who never traded before and now are thankfully at least trading fractional shares within, they're not trading these monster position sizes without having experience. You're going to get ran over. There's no other way I could put it. You're going to get ran over because you have this mistaken belief that the market can't go down, won't go down. And even worse, if it does go down, you believe you shouldn't be trading without a stop loss and that the market is just going to miraculously at some point just save you. You're not in control when you have that thought process. My goal, your goal, all of our goal should be for you to be the reason you make money, for you to be the skilled person understanding how to manage trades, how to find order flow, how to read the tape, how to manage everything between entry and exit, which includes if the trade's not working out and it starts to move against you, you have a plan in place. You scripted what should happen if it moves against you. The reason I'm saying this right now is because we're kind of feeling bubbly right now. We're kind of feeling at the point where when so many different people who are not traders at all are starting to tell me about how heavy they're starting to trade right now, how they're thinking about quitting their jobs where they have a pension or a 401, excuse me, a 401k, I guess these days, things are starting to get scary. They're starting to get scary. And I think one of the easiest visualizations of this is a stock QS recently that was trading roughly around $60, traded from 60 to 130 in basically 5 days, and now has traded all the way back down into, I believe, we'll take a look in a second. I believe it went from 130, now I think it's down around 40. If you don't have a plan, if you don't look both ways, expecting stocks to both move in your favor and what you plan to do if it moves against you, you're not trading like a pro. And I'm not talking about quitting your job. I actually don't recommend quitting your job until you have a track record of success. I just can't express that strongly enough. I've been through this for a long time. When and if, and again, let's face it, it's probably all of our wildest dreams or biggest ambitions to not want to work for somebody else, to want to be sitting at your desk for an hour or two a day, watching stocks, trading whatever security you happen to trade right now, and be your own boss. Of course, like who wouldn't want to do that, right? But don't do that until you have a track record while you're doing it part-time. Be smart. Be smart to say, okay, my trading company, which is how you should treat it, my trading company has earned money for the last 2 quarters, the last 3 quarters, for 45 days, 60 days, 90 days, 6 months, that's a real track record. Not 1 or 2 days, not even a week, a track record. And here's why: different market conditions. Certain market conditions, there's a lot on the table and you got to go and get it. For example, right now, in the market that we've been in for the last 9 to 10 months, and we might get another wave of that. If we get another stimulus package, it might happen again. But what spurred this Stocks for Breakfast today is the amount of feedback that I'm getting from both new members in the boot camp and especially here on social media, where every trade doesn't beautifully go up as soon as you hit the buy button, and not understanding or not accepting or not ever expecting a trade to be a loser. That's batty. I don't know if there's any way I could explain it. Losses are a part of even the best trading strategy. Again, I just want to be very clear. There is 3-to-1 risk reward, and you have an edge. So let's say you have 3 on your winners and 1 on your losers, and let's say that happens 60% of the times, which is really good. Okay, that's really good. So let's say that happens 60% of the time. You're admitting, even in a really good strategy, that there's 3, but you're admitting there's 1. You're admitting that there's going to be a loser. You're admitting that there's going to be a downside to accepting risk in exchange for that profit. Mentally prepare for that. One of the biggest things that we do in the boot camp, one of the most valuable skills I can help somebody with, and what I want to help everybody with, is understanding that every trade we place is nothing more than 1 as a part of the edge. You put the trade on, you manage it. You put the trade on, you manage it. You don't emotionally react to every. You don't get too high when you're winning. You act like a pro, and you don't get too down when trades don't work out, because that's a part of the process. It's a part of what we do. And I guess you could kind of call this a public service announcement to just make sure that you're trading in reality, and those unrealistic expectations of these 100% gains that people think that should be a regular part of what we do. It's just not. It's not sustainable. It's happening. It's happening in a few stocks that go from $5 to $25 in 5 days. But that's not what history tells us is normal. As a matter of fact, that's usually, like I said, bubbly territory. So how do you get around this, right? Really, the whole point of this is, how do you get around this? How do you actually fix this? Even if that happens, which it will, how do you get around it? Well, number one, you learn how to read the market better. You absolutely need to understand how to interpret the obvious order flow, whether it's bullish or bearish, and just as importantly, when it's changed, so you decide to do nothing, pull back, or maybe even short sell. So you should be watching the SPY ETF, the S&P 500, the Dow Jones, the NASDAQ, the Russell, and then you can break it down even further into any other individual industry groups. Number two, trade only in that direction in your stocks when they're obvious. Now you have a dichotomy. You have, is the market obvious versus is your stock obvious? And that's the big question. How do I stack the odds? Like we talk about all the time, how do you build an argument? Well, when you only trade in the direction of the market, when it's obvious and bullish and you're a buyer, that immediately raises the expectation for your profit target to be hit versus your stop loss. Number two, what if the market's choppy? What if it's kind of going sideways, right? Can you still trade and trade successfully? Absolutely. So working your way over, another bit of cement underneath a good trade, is industry groups. So you start out with a larger sector, and then you break down the larger sector into individual industry groups. For example, we've been talking about quite a bit, going from electric vehicle stocks to solar stocks to marijuana stocks, all the way across the board, finding out which stocks are in play right now. It's known as sector rotation, but sector rotation, especially when a lot of stocks in the same industry group are lighting up, your attention needs to be there because it has smart money attention. And number three, I think, is one of the strongest ones. When you have one of those scenarios in place, or all of those scenarios in place, you got to make more. You got to get in there and make $5,000, $10,000, $20,000 on a good opportunity when it's on the table, so that when you have all these losses, they don't matter. We call them just paying the bills. You're paying the electric bill. It's a business expense. You're paying the rent. You're paying employees. It's a part of running a trading business. You have losses. You have software and you have losses. But when you have these bigger profits, your company's making enough revenue where you just go ahead, pay the bills. It doesn't matter. We're making enough money. You want to pay attention to the bills, but you have to pay the bills, and they're much easier to pay when you have much bigger profits, which leads us to the next one. If you are an advanced trader and you want to learn more, if you trade options and the market goes down, you could buy puts. You could learn short selling. It's not for everybody. Most people are comfortable only being a buyer. And again, I said I'll post that video this weekend if the market's going down. I will say this, when the market is in a confirmed bull market, short selling is a very difficult proposition. You should really be waiting for stocks to pull back and look for a new opportunity to buy while we're in a bull market. The next one is probably the most important one. Out of everything I just said, the next was probably the most important. And that is only trade your edge. Only trade your edge, which simply means that you need to force the market. You need to force your ideas. You need to not force the market. You need to force the market to look a certain way before you take action, which means if you take mediocre trades, you're messing up that 3-to-1 risk reward. It doesn't exist anymore because now you're not taking a trade that has a high probability of following through. And those are the trades that drain your bank account. So I just want to get to the point where I hope that I'm throwing a little bit of reality out there, not in a way to douse your dreams, not in a way to shoot down anybody's ambition. It's just that we need to look at both sides of the street, and you need to be okay. If you have some winning trades and you're up $8,000 for the week or $1,000 for the week, and then you have a tough day where maybe you did everything you were supposed to and you lose $200. Focus on the fact that number one, you traded well, you read the market good, and you're still net profitable. That's real trading. So if the market happens to roll over, if the market doesn't match your conditions perfectly, be okay with being in cash, sit back, and then know what you need to see, and only then take action. This is the most exciting, fulfilling thing that we could possibly do. It's us looking at the market and getting in there and making the stock market make us money. But you got to be acting like a pro, which means looking both ways, having a strategy, and having the discipline, the focus to only trade when that edge is in your favor. If you have any questions about this, definitely click down and give us a thumbs up. I'd appreciate that. And if you find these videos helpful, I'd really appreciate it if you subscribe. That would be awesome. Have a great day.